Today is the much anticipated Fed meeting. The markets have already priced in a 25 basis point rate cut. The real question today will not come down to the rate cut. The real mover for the market will be what the Fed actually says in that meeting, and particularly in the press conference. So they'll have the meeting cut out, and of course Jerome Powell will go do his press conference. That's where we'll get some details about what their positioning actually looks like. Yeah, we're cutting rates, but maybe this is only one rate cut this year, or hey, we're starting to see a lot of weakness in the economy to cut rates more. Whatever that says, and particularly the changes that are made. What do they say about employment? Employment was robust, but now is it moderating or is it weakening? What are they saying about the economy? Is it robust or is it getting weaker? Those are going to be the key words that everybody's looking for in that statement to help kind of forecast what to expect for Fed policy going into the end of this year. Is it going to be one rate cut and a pause? Is it going to be rate cuts at every meeting? That's what the market's looking for. And what the markets have been pricing in is at least 2 rate cuts this year, if not 3. So anything that disappoints that will likely lead to some type of sell-off in the market. Don't expect a lot of fireworks today, but again, there's always the risk out there, particularly with markets pretty elevated here. Money flows have been very, very strong. We're seeing a lot of risk asset chase. Everybody's chasing assets of pretty much every ilk right now, pushing prices really to extremes on a lot of levels, not just on a daily basis, but also on weekly and monthly basis as well. A lot of assets are getting really, really extended because of this chase, and that's the real risk. So just kind of pay attention to the markets today. We'll see what happens. Again, heading into that Fed meeting today, stocks are really poised very well. They're very extended. We're overbought on multiple levels. So the real risk today is downside rather than upside. Markets have already priced in pretty much everything positive the Fed could possibly say. So there's risk for disappointment coming out today because of that extension. Also, bond yields, this is going to be one of the things that are going to be a focus in the markets today. Bond yields continue to drop here as the Fed cuts rates. So again, as the Fed cut rates, so go Fed rate cuts, so go longer end yields. And those are going to continue to kind of track each other. Markets are starting to price in rate cuts, both on the 2-year Treasury rate, which is about 80 basis points lower than where the Fed funds is right now. That gap will close a little bit today with a Fed rate cut. But again, in the bond market have been preempting these rate cuts. So again, as we continue to cut rates, you're going to expect to see lower yields. And generally that's going to coincide with slower economic growth. But see, there's the interesting dichotomy is that the markets are banking on Fed rate cuts and the bond market's telling you there's a problem with the economy. So which one's right? Catch me daily on The Real Investment Show. The link is in the description.